Good morning, friends. Welcome to MCQ series for this BFM. And remember, we are covering the most probable MCQs. Okay. So without wasting the time, immediately let's solve because the exam is near. You all guys are having the exam pressure. Okay. So let's solve. See, schedule is very simple. Only objective questions. Okay. Nothing else. Chalo, let's start. So I'll explain also. It's not that only answers I'll give. I'll explain you also. The method of payment where the exporter relies on undertaking the bank to pay is called as what? Bank guarantee, LC, letter of comfort, and none of the above. So the method of payment where the exporter relies on the undertaking of the bank means what? What do you mean by this? See this. This is primary and secondary mode of payment. Okay. What is primary mode? What is secondary mode? It's very simple. See this. Suppose I am the buyer. Okay. I am the buyer and someone is a seller from somebody somewhere. Okay, now the seller does not trust me, okay, whether I'll pay or not, because obviously how will he or she trust me, because they are in a different country, I am in a different country. So what does the seller say? Instead of you giving me the payment guarantee, what you do, you tell your bank, some big bank, not any bank over here, some big bank in your country, to give me a payment guarantee. So yeah, then it's simple. So now there are two methods of doing it. Number one, this bank will give the guarantee to the seller in two ways. Okay, number one is it can tell this seller that, see, if this guy doesn't pay, if this buyer doesn't pay, then I will pay. Okay, this can happen. So if bank says so that if this buyer doesn't pay, then I will pay, in that case what happens? In that case it is called as guarantee. Okay, guarantee, or in foreign language we call it standby LC. It's one and the same thing. Okay, don't get confused by this word standby LC. Okay, standby LC and guarantee are same. Okay, only different words are given in the European markets and US markets. Second one, now the bank can tell this seller that, forget this, you ignore this guy, I will pay you directly myself. No, you won't get the payment from the buyer, I will pay you. Send the goods to this buyer, I'll pay you, don't worry about that. So that is called as LC, letter of credit. So letter of credit is the primary mode of payment, primary. Okay, primary. And its guarantee is a secondary mode of payment, means if this buyer doesn't pay, then the bank will pay. So what is the case over here? The method of payment where the exporter relies on the undertaking of the bank. So undertaking of the bank to pay. So bank is taking undertaking to pay over here. So it is basically LC, isn't it? Obviously. The red clause LC is known as what? Means, what is this red clause LC basically? See, this red clause LC means the LC, this is the LC document. Have you seen the LC document? Okay. The LC document is generally this, it comes through SWIFT, international LCs. So all the separate clauses are there on that. And in the red clause LC, there is a separate clause mentioned in the terms and conditions. That clause says that the seller can get some pre-shipment credit. From whom? The seller can get the pre-shipment credit from either the buyer as a sort of advance over there. Okay, it's there in the terms and conditions, T and C, terms and conditions. Okay, it's given over there. So this LC will state that this seller can get an advance payment from the buyer. So that advance payment is similar to that of this pre-shipment finance. Okay, so this red clause LC is also known as what? Standby LC, anticipatory, automatic, and back-to-back. So what is it called as? It is called as anticipatory LC. Remember this, it's called as anticipatory. Okay, because somebody is anticipating some additional payment over here, or payment earlier payment over here. Okay, next one. Now before going ahead, download Adda 24/7 app on your mobile. In this app you will be getting premium study material plus live classes, ebooks, tests, everything you will be getting. So download it right now. Okay, if the export cargo is lost in transit, the exporter should, so what should that exporter do? If the cargo is lost in transit, then what happens? See here, means what? It's very simple. I have sent the goods via some cargo, some ship, and that ship is lost. can this happen? Yes, this can happen because there are many dacoities or robberies happening. That's called as TPND, theft, pilferage and destruction. So many dacoities are happening in particularly in the South African Sea. Okay, so when such thing happens, what will you do? The exporter should claim under marine insurance, claim with DICGC, seek write-off from the of post-shipment credit, and seek refund of the customs duty. So the answer is very simple. See this: none of the organization will leave their share. It's very simple. There are no free lunches in business. So no bank will never write off the post-shipment credit. Why should a bank write off? It has financed. If your ship is getting lost, it's like if I finance some car loan and that car gets lost, then that guy will say, I don't pay your loan. Why? Because car is lost. What have I to do with that car, isn't it? So that is basically, this is out. So he can't claim a write-off. Seek a refund customs duty. Why will the government shed off with its customs duty? Your ship is lost. Why should I care? Isn't it? It's that logic. So that is out. So claim with DICGC. DICGC is for what? Deposit. Deposit, isn't it? Yeah. So it is for deposit. So that is out. So this is the right answer. Claim under the marine insurance, because there should be an insurance taken for any export document which you are doing. Otherwise, many things, that's called as TPND. TPND means what? Theft, pilferage, and this is and destruction. Okay, so this insurance is against this TPND. If a formal legal commitment to extend credit up to certain maximum amount over a stated period of time is known as what? LC, revolving credit, line of credit, and trade credit. Sir, formal commitment to extend a credit up to maximum amount. What do you mean by this? See this. It means that suppose I am SBI, okay, and Reliance comes to me, and I have to finance that Reliance. So what happens? I tell Reliance that I'll sanction you 100 crores, okay, for let's say 2 years. I'll sanction 100 crores for 2 years. Now these 100 crores which I sanction to Reliance, I'll tell them I am sanctioning the full amount of 100 crores. You have to utilize it within 2 years. In what form? Now you can utilize it in the form of, let's say, let me give one or two examples. You can take term loan of, let's say, out of this 100 crores you can take 30 crores as a term loan, right? Then you can take working capital finance, WC finance, let's say 20 crores. Then remaining this something bill discounting, anything. So this sanctioning of the whole limit, under which there are sub limits for others, that is known as what? That is known as line of credit. Line of credit means it is the amount sanctioned for a specific period, and that amount can be utilized by this person for under any means of finances. Okay, agreed means of finances. Any means, not any. Agreed means of finances. Okay. Now subscribe to Officers Adda 24/7 YouTube channel. Mainly you will get the free YouTube series. What are you right now seeing? You are seeing the same free YouTube series. So you get free YouTube series on all the topics of JIB and CAIIB. Okay. So immediately download it. You get various marathons. Now exam time. So marathons are useful over here. Okay. When a firm needs short-term funds for a specific purpose, the bank will likely be a means what will the bank sanction? Means revolving credit arrangement or transaction loan or line of credit or none of the above. Means when the firm needs a short-term finance. Here, short-term finance means that finance is for generally max to max 1 year. Okay, that's called a short-term finance. So what will bank do? Bank will generally sanction. Transaction loan means what? This is separate. This is transaction related to transaction, and it may be beyond 1 year also. Line of credit, it's not the same. Line of credit means it's a just now I told you, it's a blanket sanction given to that customer, and that customer will use it in various terms, including term loans. So now here my case is not term loan. I want short-term credit, so it will be definitely revolving credit. What is cash credit? Cash credit. What is CC? CC is the revolving credit. What is revolving credit? Revolving credit means if I take the disbursement of CC, I give some checks to my suppliers, and once I get the money I repay back, and the amount is charged only for the withdrawn amount, right? That's the way CC works. If the importer refuses to accept the bill drawn on him, the exporter should reimport the goods, must find an alternate buyer, may reimport or sell to an alternate buyer depending on the commercial expediency, and sue the importer. See here, all the cases are possible. Okay, sue the importer, that is also possible. But the question over here asked is, what is the business sense? Legal sense, even I agree, he can sue the importer. Okay, but there will be a long case going on, and this importer exporter means there are separate countries. You don't know the laws. You'll have to fight the case in that country. So the best way is what? Should reimport the goods means if it is nearby. Okay, if I send the goods from India to, let's say, UAE, okay, then it's easy. If I send the goods to India to Sri Lanka, then it's easy. I can reimport the goods. But if I send it to Africa or US, then how can I get the goods back? The cost of bringing the goods will be more than the cost of the goods many a times, isn't it? So I must find an alternate buyer. So the answer will be what? May reimport or sell to an alternate buyer depending on upon the commercial expediency. So C is the answer. It depends on the situation, isn't it? So C is the right answer over here. A bank may refuse to accept the export bill for collection when the customer has insufficient limits under the bill discounting facility, when the documents have discrepancies when compared to the LC letter of credit requirements, when the documents are received from non-customer, and all of the above. So when can the bank refuse to accept the export bill for collection? Means what? See here, there is an exporter who has sent the goods. Now he has submitted the documents to you, okay, and then he is asking for export bill for collection. Means what? He is basically asking for this post-shipment finance. So you are not ready to handle the post-shipment finance case. When? So this is possible if the limits are not there. It's but obvious. If there are insufficient limits, if that customer, it's your customer, agreed, but that customer's limits have got exhausted, how can you sanction him a new loan in that case, isn't it? So that's out. When the documents have discrepancies, even in this case, how will you give the post-shipment finance? Suppose if the documents are discrepant, then the issuing bank will definitely reject those documents. So if they reject those documents, they won't pay. And if you pay to this guy already, your loan will become NPM, isn't it? So that's why if there are discrepancies, even in that case, when the documents are received from a non-customer, that is also possible. Non-customer means what? The customer is not of your bank. He is from some other bank, and then he has come to you for getting this pre-shipment finance or post-shipment finance. So when the documents are received from the non-customer, you can definitely reject it. See here, it doesn't mean you can reject it, means it doesn't mean you should reject it. If the customer is genuine, if he is having all the KYC norms satisfied, then you can definitely finance that guy. Okay. Only the point is you must be totally aware of the KYC of the transaction and AML issues. Okay. So the answer is D, all of the above, isn't it? Advance remittance from the importer can be accepted by an exporter in India provided. Means what? Suppose if I am the exporter, see here, I am the exporter over here, okay, exporter, and I have to send some goods, okay, send some goods to USA, okay, to USA. Now this guy in USA is ready to give me some advance. Suppose if the goods are for $100, okay, so this guy is ready to give me some $25 in advance. So when can I accept it? I can accept it when, let's see the options. The advance does not carry any interest payment. That's obvious. Suppose if I am getting a $25 freely without paying any interest, why shouldn't I accept it? I'll accept it. So A can be the answer. What about B? Shipment will be made only after 1 year from the date of receipt of advance. This is bogus condition. None of these conditions exist like this. Shipment will be made only after 1 year. Okay. So this can't be done. So last one is what? Rate of interest if payable does not exceed Libor plus 1%. Okay. So does not exceed Libor plus 1 means what? It means it should be below 1%. Libor plus 1. So that can also be the answer because it's very cheap rate and it's given under RBI prescriptions also. So both A and C it should be, not B. Both A and C. Okay. So answer is D, both A and C. Now let me discuss the batches. See this, Powerpack revision batch and video courses batch. Both of them are useful for you. I would always suggest to join the Powerpack revision batch. There you get live classes, the revisions. But the point over there is, if you don't have time because of bank pressures, then what will you do? In that case, what happens? You can join the video courses batch. You can watch at your ease, at your time, whenever you want. In both of them, so all the topics are covered. Okay. Now second point over here is all the compulsory subjects also. Now the point over here is, use the code Y432 to get maximum discounts. Okay. So what are the discounts? Let me show you. Okay. Let's go to Adda 24/7 live. Okay. Let me go to bring in Adda 24/7. In fact, I would suggest, if you are having the app, go through the app. Okay. In the app, you are getting 1% extra. Okay. Let's go to Adda 24/7. See this over here. Now on the front page itself, click on JIB and CIB. Correct? You'll see CIB 23. Click on CIB 23. See here. Don't go for November batch immediately. First, let's clear it in May itself, isn't it? Click on this Powerpack revision batch. You'll get the details of the batch. All, read everything. The timings are given, study plans are given, the dates are given. You can read it. Okay. Now 3519. Click on more offers. Put the code Y432. Y432. Click on apply. Now look at this. 15999 reduces to 3519. Means such a huge discount, 78% off you are getting. In fact, I would suggest you can go for video courses batch also. In video courses batch, as I told you, all the subjects are covered, and as per your ease, you can watch it at your time, your free time, right? See this. Scroll down, you'll get video courses batch on the front page again. Okay. Again, go through the details. And let's look at the fees part. 5059. Click on offers. Put the code Y432. Click on this Y432. See this. Offer is 5059. Means 22,999 reduces by 78% to 5059. Go for it immediately. Okay. Because once you clear CAIIB, you'll recover all these funds in how many days? How many months? Hardly 3-4 months, isn't it? So